Hi everybody, this is Mike Toy, Regional Sales Manager here at National Brokerage in our Boise, Idaho office. Thanks for tuning in. Today we're going to be talking about return of premium. Return of premium is a rider that goes on a term policy, and it is just like it sounds. It entitles the insured to a return of their premiums. There are some caveats to it, and that's what we're going to talk about. One of those caveats is that you cannot take a partial return, and you can't do it before your term is up. So in other words, if you have a 20-year term with return of premium, you can only exercise that return of premium at the end of those 20 years. You can't decide halfway through that you've had enough and you want your premiums returned. They don't do that. So that is one thing to keep in mind. Another thing to keep in mind is that if for some reason the policy were to lapse during those 20 years, no returns. So it's very strict as to when and how you can have your premiums returned. More or less, you just have to finish that term and get all the premiums returned at that time, and that's it. So those are the things to keep in mind. Something else to keep in mind is that it is typically about twice the cost. So if your 20-year term would normally cost you $50 a month, in this case it might cost you $100 a month for that option to have it, give or take a little bit. The return premium riders are becoming more and more rare with carriers. There used to be 4 or 5 options on any typical quote engine. Now there's maybe 2 or even 1, or sometimes none, depending on the parameters of age and face amount and whatnot. So that's something else to keep in mind, is that the options are becoming harder to find. The second type of return of premium is the type that is becoming more common, and that goes on a GUL, or permanent policy. It works roughly the same way with a few differences. It entitles the insured to a full or partial return of their premium, but there are still very strict time frames in which you can do it. So if you have someone who has a GUL and they want to exercise that return of premium, typically speaking, there are about 3 times that they can exercise the option: years 15, 20, and 25. And that varies per carrier, so definitely check the nuances of the carrier you're going with to be sure. But generally speaking, it's years 15, 20, and 25, and you can exercise a surrender and get up to 50% at year 15, or 100% at year 20, in year 25. And typically you have about 60 days to do it at each of those intervals. So you have to remember in 15 or 20 years if that's what you want to do. Usually carriers will send you a letter or some type of communication to let you know of the option, but they don't have to. So it's something that comes and goes, and if you're not paying attention, it can go. So I hope that helped. If this video helped you at all, please click like and subscribe and see some of our other videos about life insurance and being a life agent and tips and tricks. And feel free to comment down in the comment box. I try to stay up to date on those as much as possible, so I will respond to everybody as quickly as I can. Thanks a lot. Have a good day.